Welcome back, everyone. Ready for another deep dive?
Always excited to dig into some new data.
Today, we're focusing on Aarti Industries Ltd.
An Indian company.
Yep, listed on both the BSE and NSE. Ticker symbols, if you're curious, are 524208 and ARTIND. They're in the business of specialty chemicals.
Okay, specialty chemicals.
Yeah.
Always a fascinating area.
Right. What really caught my eye is that they make over 100 products.
100, wow.
And get this, all from benzene.
Benzene is a starting point. That's interesting. It's such a basic building block in chemistry.
Exactly. So we've got their financials, recent company announcements, the whole 9 yards. Let's see if we can unpack what's going on with Aarti Industries.
Sounds like a plan.
So specialty chemicals, they're kind of under the radar, wouldn't you say?
Totally. Most people don't realize how crucial they are. We're talking ingredients for everything. Medicines, electronics, you name it.
Right. So Aarti Industries focusing on benzene derivatives?
It's a smart move. Benzene's so versatile, they're positioned to supply a ton of different industries. Could even be a dependency there, which makes them pretty influential.
That's a great point. It makes you think about all those hidden connections between companies and the everyday products we use.
Absolutely.
And speaking of connections, Aarti Industries isn't just some small local operation. They've got 16 manufacturing units, 2 R&D centers.
16 manufacturing units. That's impressive.
And a global customer base in over 60 countries. Pretty impressive, right?
That kind of global reach can be a real advantage. Think about diversifying their supply chain. That's huge in today's world.
Makes them less vulnerable to disruptions, I guess.
Exactly. Plus, it shows there's demand for their products worldwide. Tapping into different markets like that is a big plus.
But I imagine managing an operation that complex across so many borders.
Oh, there are definitely challenges that come with that. Lots of moving parts to keep track of.
For sure. Okay, time to crunch some numbers. As of November 8th, Aarti Industries' share price closed at 474.
474. Got it.
Now, here's the thing. The stock's been all over the place. High of 770, low of 472.
That's quite a range.
It is, and with a market cap of 17,198 crore.
17,198 crore. So we're talking mid to large cap territory here, not a small player by any means.
So what does all that tell us about their size, their position in the market?
Well, that market cap definitely indicates they're a significant player. As for the stock price fluctuations, could be a few things. General market volatility, maybe company-specific news, even broader trends in the chemical industries. We'll need to look closer.
Right. Okay, so we've got some data here highlighting potential pros and cons. One pro, the stock's trading at 3.16 times its book value.
Which could make it attractive to some investors.
But then there's a con. The dividend payout's been pretty low over the past 3 years, about 12% of their profits.
12%, that's on the low side for sure.
So what's the takeaway there? What does that low dividend payout potentially tell us?
Could be a couple things. Maybe they're prioritizing growth over giving those profits directly back to shareholders. Instead, reinvesting that money back into the company. R&D, expanding capacity,
Makes sense. If they see opportunities to grow, why not reinvest those earnings?
Exactly.
But wouldn't that raise questions about their long-term strategy? Are they in it for the long haul, or could this be a sign of some deeper financial issues they're trying to overcome?
That's the million-dollar question, isn't it? To figure that out, we need to dive deeper into their recent performance, see what those numbers tell us.
All right, so let's do that. Looking at their quarterly results, there are some pretty interesting trends here. Both good and, well, maybe not so good. For instance, back in December 2021, their operating profit margin was a whopping 43%.
43%. Wow, that's impressive.
But then by June 2023, it had plummeted to just 14%.
Okay, that's a pretty dramatic swing.
Huge. What could explain fluctuations like that?
Lots of factors can impact profitability. Input costs like raw materials, energy prices, maybe they hit some pricing pressure from competitors, or it could be one-time events specific to those quarters.
True, we need to keep the bigger picture in mind. We've also got data on their compounded sales growth and profit growth over the last decade. It's interesting, sales have grown pretty consistently, around 9% each year.
That's solid growth.
But their profit growth hasn't kept pace, actually dipped into negative territory in the last 5 years.
That's a bit concerning. If sales are up but profits aren't, something's squeezing those margins. Could be those rising input costs, increased competition. We need to look closer at things like profit before tax, earnings per share, and see how those are trending.
Okay, starting to see some potential challenges here. Let's shift gears for a sec and talk shareholding patterns. These can be pretty revealing, right? Give us an idea of how different investor groups are feeling about the company.
Looking at the data, there are some notable shifts. particularly in the promoter, FIF-PI, and DII holdings. For example, promoter holding has been steadily decreasing over the past few quarters. What's your take on that?
A decline in promoter holding, that always raises eyebrows, could signal a lack of confidence from those closest to the company. On the flip side, if we see a big jump in FIF-PI or DII holdings, that could be a sign that institutional investors are sensing an opportunity. It's all about understanding who's buying, who's selling, and why.
Makes sense. Okay, last but not least, let's take a quick look at Aarti Industries' recent announcements and events. These can be really telling, right? Give us clues about their strategy, what might be on the horizon.
Company announcements can be a goldmine of information. I'm eager to see what they've been up to. Well, one that jumps out is from November 1st. They just announced their audited financial results for the quarter and half year ending September 30th. Fresh data.
Ooh, fresh data is always good. We'll definitely want to analyze that closely. Could confirm some of our suspicions or reveal something totally unexpected.
Exactly. And then on October 24th, they had an analyst meet presentation highlighting Q2 and H1 of the fiscal year. Sounds like we might get some direct insights from the company itself.
Always valuable to hear the company's own interpretation of their performance and what they're prioritizing.
And there's even more. On October 23rd, just before that presentation, they released an audio recording of an earlier analyst and investor meet, so multiple opportunities to hear from company leadership.
Having different perspectives like that is always helpful. By comparing these sources, we can build a more holistic view of Aarti Industries. See if their messaging is consistent, if the analyst presentations align with the hard data. It's all about sifting through the noise and finding the real signals.
Love it. Okay, I'm also seeing a bunch of credit rating updates throughout the year. Looks like they've been reviewed by agencies like Crystal and Fitch. What's the significance of those credit ratings?
Credit ratings are essential. Basically, these agencies are evaluating Aarti Industries' financial health. Can they repay their debts? A strong credit rating is a great sign for lenders and investors. A downgrade, on the other hand? Well, that can raise some red flags.
Makes sense. Oh, wow, there's a whole section here called con calls. It's packed with transcripts, notes, even PowerPoint presentations from calls going all the way back to 2016.
Con calls are gold, especially if you want to understand the nuances of a company's situation. They're more candid than press releases or financial statements. You can analyze the language they use, their tone, the questions they get asked.
Wow, this is a lot to unpack. Okay, let's see. Wow, there's a transcript from November 2024, which must be from the meeting we just mentioned. But wait a minute. There are 4 separate con call transcripts from August 2024.
4 in 1 month. That's unusual. August must have been a busy month for Aarti Industries. Maybe a major event happened, or they needed to address investor concerns. Who knows?
Definitely adding those August con calls to our list. Anything else jumping out at you from these announcements?
Most of them look like routine updates or regulatory filings. But even those can contain hints about the company's direction. We should definitely look out for anything related to new products, expansions, partnerships, that sort of thing.
Good point. All right, I think we've hit the main points from Aarti Industries' recent announcements. So where does this leave us? What's your initial impression?
Well, based on what we've seen so far, it's a mixed bag. On one hand, they're a major player in the specialty chemicals industry. Global presence, consistent sales growth. That's all good.
Great. Those are definitely positives.
But their recent profitability trends and those shifts in shareholding, those raise some valid questions.
I agree. There's a lot to be optimistic about, but some potential red flags too. Before we move on, though, I want to circle back to those quarterly results for a moment. We talked about those big swings in operating profit margin.
Yeah, definitely a roller coaster.
But there's one detail that's really fascinating. Remember December 2021? That standout quarter with the 43% operating profit margin.
Oh, yeah. Can't forget that one. A real outlier.
Well, check out their profit before tax for that quarter. 809 crore. That's more than double their profit in any other quarter we have data for.
You're right. That's huge. Something significant must have happened during that time. Maybe favorable pricing conditions or a major new contract. Something out of the ordinary. Definitely need to understand what drove that exceptional performance.
And then just a few quarters later, in March 2023, their tax rate shows up as negative 10%.
Negative 10%. That's not something you see every day. Companies usually pay taxes on their profits. A negative tax rate suggests they received some sort of tax benefit or credit that quarter. Could be due to tax incentives, adjustments to previous payments. Something's going on there.
These numbers are wild. It makes you wonder, is this kind of volatility normal for this industry, or is Aarti Industries just a particularly bumpy ride?
To answer that, we need to compare them to their competitors. See if those swings are typical for the specialty chemical sector or if Aarti Industries is an outlier.
Okay, so some industry benchmarks would be helpful for context. But before we go there, let's revisit those shareholding patterns again. We talked about the decline in promoter holding, but there are a few more details worth highlighting.
All right, I'm ready to delve back into the shareholding puzzle. Always fascinating to see how different investor groups are reacting.
So back in March 2017, promoter holding was a healthy 53.78%.
Which is like a good position.
But fast forward to September 2024, and it's down to 42.61%. That's a pretty big drop.
A steady decline like that does raise some concerns. Could be a sign that those closest to the company are losing confidence. But we need to consider the context. Were they diversifying their holdings? Were there any specific events or announcements that triggered this trend?
Good points. Now, while promoter holding was decreasing, FPI holdings were actually going up. Back in March 2017, they only held 4.07%. But by September 2024, their stake had climbed to 9.68%.
Interesting. So as the promoters were pulling back, foreign institutional investors were stepping in. Maybe they see something the promoters don't, or maybe they have a longer-term outlook and are more comfortable with the risk.
Like they're betting on Aarti Industries' ability to capitalize on future growth, even with the current challenges. Now, the domestic institutional investors, the DIIs, those tell a slightly different story. Their holdings have fluctuated over the years, but haven't seen that same kind of jump as the FIIs. What do you make of their more cautious approach?
Could be that they're taking a wait-and-see approach,
Yeah.
looking for more clarity on Aarti Industries' future prospects before they go all in.
So we've got promoters selling, FIIs buying, and DIIs on the sidelines, watching closely. What does that tell us about the overall sentiment surrounding Aarti Industries?
It definitely paints a picture of uncertainty. The declining promoter holding is a bit worrying, but the increasing FII stake suggests that some smart money is seeing an opportunity. And then you've got the DIIs with their more cautious stance, reflecting that mix of signals we've been discussing.
It's fascinating how everyone's looking at the same data but coming to different conclusions. Okay, remember those 4 con calls from August 2024? I think it's time to dive into those and see if they can shed some light on this whole situation.
I agree. Those con calls could be the key to unlocking a deeper understanding of Aarti Industries' challenges and opportunities. What should we be listening for?
Well, we need to see if they address those declining profit margins, what they're doing about rising input costs, that sort of thing.
And don't forget about the shareholding patterns. We need to see if they give any clues about why the promoters might be reducing their stake, what's attracting those FIIs, and what the DIIs are thinking.
It's like we're about to embark on a financial detective mission. All right, listeners, get ready, because we're going deep into the world of Aarti Industries' con calls.
Shoo! Those August 2024 con calls? What a whirlwind of information.
Tell me about it, like getting a peek behind the curtain at Aarti Industries.
One thing that kept popping up was those rising input costs. Management talked a lot about how those increasing prices for raw materials, especially benzene, are putting the squeeze on them.
Yeah, makes sense, right? Benzene is so crucial for them. But it's got to be tough when those costs keep going up and up.
Exactly. And it's not just benzene. They also mentioned energy costs, supply chain issues.
Oh, right, those supply chain disruptions. Everyone seems to be dealing with those these days.
It's a real headache for businesses. But anyway, all those things combined are really impacting Aarti's profit margins.
Which explains that big drop in their operating profit margin we saw from December 21 to June 23. Seems like those input costs are a big part of the story.
Definitely a key piece of the puzzle.
Okay.
And I was really interested to hear how they're planning to deal with it. In one of the August calls, an analyst asked specifically about their strategy for mitigating these cost pressures.
Oh, what did they say? Were they just like, well, we're doomed?
Not at all. They actually had a pretty well thought out plan. First, they talked about improving operational efficiency, trying to streamline things and cut waste.
Do more with less. Classic strategy.
Right. Second, they said they're working on negotiating better deals with their suppliers, getting those raw material prices down. And third, they're even looking at alternative raw materials, seeing if there are any substitutes they can use.
Smart move. Cover all the bases.
Exactly. They also mentioned exploring ways to pass on some of those costs to their customers through price increases. But, that's always a risky move.
Totally. Raise prices too much and customers might start looking elsewhere.
Exactly. It's a tough balancing act. But what I found most interesting was their emphasis on innovation. They talked about investing heavily in R&D, developing new, higher value products.
So they're not just playing defense, they're going on the offensive.
Exactly. They want to create products that are less affected by those commodity price fluctuations. Products that command a premium price.
Now that's thinking ahead. That could really help them weather the storm.
Right. And it goes back to their focus on specialty chemicals. These aren't just basic chemicals. They're highly customized, tailored to specific industries and needs.
So they're not just selling a product, they're selling expertise, solutions.
Right. And that kind of expertise is valuable. It lets them charge more, potentially shielding them from those big price swings we see in the commodity markets.
So even though they're facing some challenges, they're not just sitting back and taking it, they're fighting back.
Exactly. And that's what impressed me. They're being proactive, strategic, taking a long-term view.
Okay, so we've got a better handle on those input cost challenges and how Artis Industries is tackling them. But what about those shareholding patterns? Remember how the promoters were selling off their shares? Did the August concalls shed any light on that?
Not directly. They didn't get into specifics about the promoters' motivations, but there were a few clues. In one call, they talked about some big capital expenditure plans, investing in new capacity expansion projects.
Ah, so maybe the promoters were selling shares to raise money for those expansions?
Could be. If they believe in the company's future, it might make sense for them to free up some cash to fuel those investments, even if it means owning a slightly smaller piece of the pie.
And remember how those foreign institutional investors were buying up shares during that same period? Maybe they saw the promoter sales as a buying opportunity, especially if they believe those expansion projects are going to pay off.
It's a good bet. It all comes down to how much they trust Aarti Industries' long-term vision. Now, those domestic institutional investors, the DIIs, they seemed a bit more hesitant.
Yeah, they weren't jumping in with both feet.
Right, and you can understand why. They're weighing the potential for growth against those near-term challenges, like the rising input costs, global economic uncertainty.
It's like a giant game of financial chess.
Exactly. Each player making their moves based on their own assessment of the situation. It's all about trying to predict what the future holds for Aarti Industries.
And that prediction hinges on a few key things. Can they manage those costs? Will their investments in innovation and expansion pay off? What will happen with those shareholding patterns?
Lots of questions still hanging in the balance. But that's what makes this deep dive so exciting. We've uncovered a lot, but the story's not over yet.
We've got the pieces of the puzzle, but now we need to figure out how they all fit together.
And that's where the real analysis begins. Now that we understand Aarti Industries better, it's up to each of us to decide what it all means. Are you optimistic about their future, or are you more cautious?
It's decision time. We've laid out the evidence, now it's your turn to weigh it. What do you think the future holds for Aarti Industries?
To make that decision, pay attention to their upcoming financial results, any news about new products or partnerships, and of course, keep an eye on those shareholding patterns. Those are the clues that will tell us what direction Aarti Industries is heading in.
Great advice. Okay, before we wrap up, let's take a look at those credit rating updates. Those can give us a sense of how Aarti Industries is viewed by the broader financial world.
Credit ratings are important. They can make or break a company. Let's see what they reveal.
So these credit rating updates, we've got CRISIL, Fitch. What exactly are these agencies looking at? What do their ratings tell us about Aarti Industries?
Think of them as financial detectives. They dig into a company's financial, their debt, profitability, all sorts of things. They're assessing creditworthiness. Basically, how risky is it to lend money to Aarti Industries?
So good credit rating, they're a safe bet. Bad rating, more risk involved.
Exactly. A strong rating signals to lenders and investors, hey, Aarti's in good shape, they'll pay their debts. A lower rating, well, that raises some eyebrows. Makes people wonder if they might have trouble down the road.
Makes sense. Okay, so Aarti Industries has received a few ratings this year. In April, CRISIL reaffirmed their rating on Aarti's long-term bank facilities at CRISIL Astable. Then in May, Fitch Ratings assigned Aarti's a BB rating with a stable outlook. And in July, CRISIL reaffirmed their rating on the company's short-term bank facilities at CRISIL A1+. That's a mouthful. What's the takeaway here?
Well, first, it's good that we're seeing ratings from both CRISIL, an Indian agency, and Fitch, a global one. Gives us a broader view, both domestically and internationally.
And those ratings seem pretty decent, right?
They are. That CRISIL AMAA is considered high safety, very low risk of default, and the stable outlook reinforces that. Fitch's BBB is investment grade, though it's on the lower end. That CRISIL A1+ for short-term bank facilities, that shows they've got strong liquidity, they can pay their bills on time.
So despite those concerns we talked about, profitability, the shareholding stuff, the agency seemed pretty confident about Aarti Industries' financials.
It's a good sign. Those concerns are real, but these independent assessments give us some reassurance.
Right, it all adds up to a more complete picture. Our Aarti Industries. They're a fascinating company, operating in a specialized vital industry, global reach, history of solid performance. They've got challenges, no doubt, but they're not just standing still. They're adapting, working on strategies to succeed.
And that's what makes this whole deep dive so interesting. We've uncovered a lot, but there are still unanswered questions. Can they overcome those input cost pressures, boost profitability? Will their investments in innovation, in expansion, will those pay off? And what happens with those shareholding patterns going forward?
It's like we've laid out the pieces of the puzzle, but we still need to see how it all comes together in the end.
The analysis doesn't stop here. Now that we've got a solid understanding of RD Industries, it's up to each of us to decide what this all means. Are you bullish on their future, or are you proceeding with caution?
That's the big question, isn't it? Given everything we've learned, what's next for Aarti Industries? Are they heading for continued success, or are there tough times ahead? What do you think?
Well, if you want to stay on top of this, keep an eye on their financial results, any announcements about new products or partnerships, and of course, those shareholding patterns, those are always telling.
Great advice. Thanks for joining us on this deep dive into Aarti Industries. It's been a wild ride.
It has. Always a pleasure exploring these complex financial stories.
Until next time, keep learning, keep asking those tough questions, and we'll see you back here for another deep dive.